Into the markets now and what to expect this quarter with Alan Nuckman at the Chicago CME. He's the chief market strategist for the financial advisors Agora Financial. Thank you so much for being with us. So entering a new quarter here, the Dow trading about a 0.25% down. How would you describe the sentiment of a lot of investors? Is there some apprehension still given the volatility that we ended with last quarter?
The truth is that volatility declined a great deal last week. We had the VIX drop from 25 down to 20, so that's a pretty healthy number. A lot of the action last week was very positive. Net, the stock market had a good surge, up a couple of percent after the tough week the week before, and we're seeing a couple of other factors right now. We're seeing long-term yields come down. That was a concern, if you remember, in February, and we're seeing the dollar not move higher, so there are a lot of positives, but the biggest story is going to be the starting of earnings season here in April. That's going to give us the boost. We're going to get a fundamental reminder of how well corporations are doing.
Okay, so from that standpoint, are stocks and equities still looking attractive to investors, given all those indicators you just talked about?
Oh, yeah, definitely. If you compare that to treasuries, the yield on treasuries still doesn't even get close to what you can get in the stock market based on performance over the last couple of years. And also the dividend yield in the S&P is about 3%. So that in itself beats the 30-year return. The choice is not there. Maybe a couple of years from now, as yields continue to slowly creep higher, then people will have to make that decision. But that'll be a good choice to have, either the stock market or the high-yielding treasuries. What I want to point out here is that we're happy to be in April. April, 9 out of the last 10 years, has moved higher with the average S&P move about 2%. So I think we can focus again on what's important to the markets, corporate profits and earnings growth, as opposed to policy and politics and all the other potential worries.
Political headlines is obviously something we've been focusing on a lot in this show because of the concern that there could be an escalation in this tit-for-tat tariff situation between China and the U.S. How much of that do you think we'll see in the markets today, a concern about a potential trade war?
Well, you said it exactly. Could be. It could be. So you see the immediate reaction a lot of times in the market is a sharp sell-off. That's the human nature, the fear factor coming in. But after you think about it for a couple of days, the markets have always stabilized after these interesting announcements out of Washington, D.C. So if you look at the action today, $3 billion in retort from China as far as their tariffs on us. That's not a big dollar amount if you divide it by the number of different items they're spreading it out over. So it's really more symbolic. And here at the markets here in Chicago, we're a futures exchange. The one way they could hurt us is to impose some penalties on soybeans. They're our #1 soybean customer. That would hurt America. That would hurt middle America. They import 60% of the beans. So that hasn't happened yet. And actually, beans bounce on Friday. And I always look at the price action to truly tell us what these interesting actions mean. And so far, no impact in our grain market.
Alan, any other themes that investors will be sort of casting their eye over as we head into this new quarter?
Yeah, definitely. Focus on that dollar. The dollar got within 75 cents of making 3-year lows just here in the last week or so. Couldn't do it. You saw a bit of a bounce. It's not going higher, but that declining dollar is going to be very helpful. And where it's going to help most, I think, is crude oil. Crude oil's come back. We're trading at around 65 or so. The recent highs, the 3-year highs, are at 66, 66, a very eerie number. But if we can take out that high, then that target's 75. If you can see the crude market rally one more time, that supports a lot of energy stocks that have been left behind. That could be a catalyst because that would support the energy sector in the stock market and give us a bump there as well.
Alan Nuckman, what a great roundup. You got a lot of information there for us in 2 minutes. Thanks a lot.
Thanks for having me.